What's up, YouTube? It's Rob again with Rob in the Market, and we're back with another video. Recording kind of late today just because I had a lot of stuff to do today at work and couldn't make a video this morning. But so market's about to close, and what I mainly want to show you with this video is what I did with my CCIV stock. That's the one about to get the merger, or might get the merger with Lucid Air, the EV car company that a lot of people are talking about. You know, they really like it. It's kind of up there with Tesla, but they haven't sold any cars yet. You know, they haven't really made any money yet, but there's a lot of hype behind this company and this stock. So that's why I'm talking about it. That's why I have 300 shares and I've been playing the options with it. It is down today, but it is still up for the week. I own it at 21.54, so I'm still making good profit. So what I did today, if you guys have been following my channel, you would know that I had two options for this stock originally. I had one for a $25 call and a $40 call. So you could see down below here that the $25 call one is gone. So I'm going to explain to you what I did and what happened with it and why I did it today. So we're going to go to my history real quick. And I'm just going to start from the beginning, okay? Let's start from the beginning. I bought this $25 call. It was going to have an expiration date of February 19th. And I bought this, I don't know what the stock price was when I bought this, okay? It doesn't say, but the stock price was probably either in the high teens, like 19 or 18 when I first bought the stock, or it was probably in like the low 20s. But I got $235 for this call option. They paid me that. I got that instantly added to my buying power. You can see the amount on the bottom there, the total, $235. So that's how much I paid for it with a $25 strike. So, or $25 call. So pretty much if it went over $25, which you guys can see it is over $25, it's at $29 right now, I would have to sell it. You know, my 100 shares for $25. I didn't want to do that. This merger is still pending, so the merger can still happen. It might not happen at all, and the stock could go back down to $10. I'm taking that risk. We don't know what's going to happen, but there's a lot of talk, and a lot of people really think this merger is going to happen, and that's why this stock has gone up so much in this past week. So what I did pretty much was I bought back my contract. So I'm going to show you what I did. And you guys can do this too if you guys ever don't want to lose your shares. Like, that's why I bought back the contract, because I didn't want to lose them. So I actually bought like another 100 shares the other day on the February 1st. So there's 60 there. And then I think I bought the rest right here the same day, another 38 there. So I did that February 1st before it started really getting pumped up. And then today I decided to close out one of my contracts, or buy it back. And you can see here I bought it back for $900. So you guys might be wondering why I bought it back for $900. Well, let's do the math real quick. I got $235 originally for the contract, and I paid $900 to close it. So the difference there, I'm doing the math in my head here, so forgive me. 665, I believe. So technically, if I take out the premium that I originally got, the $235, I only paid $665 to close out the contract, right? So that's what I did. That's like the difference, how much I paid to get it back. So right now, I have those 100 shares. They're not up for collateral anymore. I'm not at risk at losing them anymore for $25. The stock price is at $30. It did open today a lot higher, though. Originally, the stock opened at $32 today, and it had a $34 high. So I'm expecting it to go back up past $30 in this next couple of days. When it does, see, already, like from $25 to right now, let's just call it $30, because it will go up to $30. That's a $5 difference. The 100 shares, so that's a $500 difference right there. So if you take out that difference too from the 665, technically I'm only down $135 now, right? You guys are following along with the math. Usually I would have this all written out so it's easier for me, but I'm just doing it all off of my head right now. So forgive me if I'm a little slow with it or if my numbers are a little off. So 135 difference, after the stock difference once it hits $30 again. That's with the $25 strike price. So I hope I'm not confusing anybody right now. So there's that. So technically I'm down still 135. But now the kicker is I have my 100 shares back. I can reset an option. Now I'm not going to set it for 25 again. Obviously the stock price is a lot higher. I can set the price a lot higher. So I feel like this stock is going to jump a lot. I can set my call option really high for $50 and get $203 premium. So that will be instantly added to my account. And once that happens, technically now I'm in the positive. I have my contract at a way higher price. Instead of $25 strike price, now it'd be a $50 strike price, double what it was before. Be making a whole lot more profit. So yeah, that's pretty much why I did it, guys. And I'm just pretty much trying to show you I'm not a financial advisor. This is my own opinion. Just showing you guys what I'm doing. I learned all of this through doing research. I also recommend you do your own research, For all you guys know, I could be completely wrong. This could all be made up and not really work. It's not made up though. This does work. I don't know why I'm saying all that. I'm just for liability purposes. You guys know why I do it. Anyways, so that's pretty much what I can do though. Like I can keep making options for this. I'm not gonna even set an option for this till it hits about $35, $36 again. Like it was yesterday and earlier today. And then I'll start setting options for it in the $50 range. Or I might even wait. I might wait for the merger to go through, because if the merger goes through, this stock could potentially double in price. It could go into the $50, $60, maybe even $70 range. Do I feel like Lucid Air is worth that much? No, not really, because they haven't even started selling cars yet. They haven't really started making money yet. They do have a lot of investors and people backing them, but at the end of the day, we don't know if they're going to be a successful car business. We don't know how successful they're going to be. So I'm pretty much along for the hype ride on this one. I do feel like they'll get the merger and that will cause the stock to go up. I could be wrong, but I do feel like they'll get it. So that's why I'm still holding it. That's why I closed out my $25 covered call position. I paid $900 to do it. And I can close out this one too right now. I would just go here and I think I would hit sell. No, sorry. Sell, I would actually make another contract for this and they would pay me the $315. But I go here and I go to buy, because originally I sold a contract. Now I'm going to buy it back. I can buy back my one contract for $315. And then I would have all 300 shares. Like, I'm not going to buy this one back because technically I'm still in the money. The stock's only at $29. There's a chance it won't go over the $40 strike price by February 19th, by my expiration date. So that's why I'm still holding this one. Even if it does go over $40 by a little bit, I would have to pay a whole lot more money. It'd be more than $315 by that point to buy it back. So I'll let 100 shares go, but I'm holding on to the other 200 till the stock either goes up a lot higher or till it actually gets the merger. And then I'll start doing options again. But this really isn't a long-term hold for me. I want to hold it till it gets the merger. And then I want to play the options with it a little bit, because I feel like the option, like you can already see the options were really good for a super high strike price of 50. Like imagine I did a lower one of $35 strike price, I get, $405. So those are my plans. That's what I'm doing with CCIV right now. And I'm only doing this because of the potential merger that could be happening any week now, any day now. People are expecting this the announcement any day. So that's kind of why I'm not doing the options either, because they're so close to the merger date, I don't want to set an option now, even at a $50 strike price, and it like doubles to 60 and I still lose my shares. And the potential of, losing like another couple $1,000s. So, yeah, that's my plan, guys. You can follow along, do your own thing. I do recommend you do your own research. Remember, I'm not a financial advisor. Yeah, I hope you guys enjoyed the video. Please like and subscribe if you haven't already. And, comment down below. Let me know if you guys are holding this. What are your plans to do with it? I just want to know what you guys are thinking and how you guys feel. And with all that being said, this is Rob with Rob in the Market. Y'all have a good one.